Kelsey Robinson, a senior partner with McKinsey Company. And today I'm joining you all to share some themes around where the consumer's mindset is in the United States. So I've been helping lead our research on the consumer for many years, and really deeply so since the beginning of COVID in March 2020. What we do is you're going to hear about 5 core themes today, and where they come from is a combination of 3 different sources of insight. One, which is kind of first-party surveys or asking consumers what's on their mind and how are they feeling. Second is third-party data, things like credit card spend and data sources that let us see how consumers are actually behaving and where they're putting their dollar. And then third, macro indicators, so macroeconomic signals that we know from the US Census and more. And we'll walk through all 5 of these themes today, one by one. And at the highest level, what we know now and have felt all year is that it's a really mixed year. And consumers and businesses are both feeling that. So let's dig in. So first, we'll talk about the macro environment. Everyone entered this year holding their breath. I like to say we were waiting for the shoe to drop. Was it a recession? When would the recession happen? And it hasn't quite materialized. And that means it's been a confusing year for brands, for sellers, and for retailers across the board. And a big part of that has been inflation. So this chart shows the consumer price index trended over time. And you see there was a big jump in inflation, and you probably felt it as individuals in your own households last year. And last summer was particularly notable, when everything from gas to groceries cost more. And that inflation has continued. That's the black line you see continuing along to the right side of the graph. But over the last few months, it's actually started to lessen and slow a bit. And while consumers are feeling that pressure on their wallet, what's interesting is the mixed signal from the economy is unemployment's actually very low if you compare it to historics. And so you can actually see the black line on this chart from early COVID peak to what is now quite low unemployment at 3.6% as of June. And the blue line is job openings, and there are many of them. And so from an employment perspective, the economy is actually quite strong. So pressure on the wallet, strong employment numbers. And what this slide shows us is the cash position for households. And the cash position for the average household is actually much higher than pre-COVID. A lot of households actually took money, both stimulus and otherwise, that they didn't spend during COVID, and they came out of COVID with a cash stock. And you can see that in the bar chart on the left-hand side. So absolute dollars, as well as a percentage of their disposable income, both those ratios are higher than they were before COVID. All right, so a mixed macro environment. The second trend we're going to talk about is the consumer perspective. And the consumer, like the economy, is also pretty mixed. They're confident in some ways and they're unsure in others. So one really important indicator of consumer mindset is confidence. And so we've been measuring consumer sentiment consistently since March 2020. And the way to read this chart is black means the consumer's pessimistic at the bottom, and the kind of medium blue at the top is they're optimistic. And summer 2022, when inflation was really peaking, we saw it was really the first very notable jump in pessimism since the start of COVID. But since then, there's actually has been some recovery. And even into this year, consumers are feeling a little more optimistic than they were last year at the height of inflation. Consumers also tell us, so they might tell us their optimism explicitly, but they also show us through their spend. And what this graph shows is actual spend, real spend, from credit card and debit card. And what you see is a real deceleration since early last year, but it is starting to level off. So the blue line is real, so spend normalized for inflation, and you're starting to see more recently a little bit of an uptick in consumer spend, somewhat matching that sentiment and the optimism that we see recovering a bit on the prior page. And when you ask consumers, why do you feel pessimistic, optimistic? What's influencing your spending habits? What they tell us is inflation is still number one. It's not as notable. It's come down a little bit from last year, but it's still number one. And aside from that, they're worried about social and political topics that are particularly recent and relevant, and importantly, employment is also very top of mind for them. So inflation, social political topics, and employment being a potential risk are very consistent, and consistent regardless of what demographic or segment you're looking at too. On employment, half of the US consumers who we say dropped out. During COVID, there was actually a big chunk of the population that left the workforce. And half of those consumers, over half of them, are actually saying that they're looking to come back. And a lot of this, as you can see on some of the quotes on the side of the page, is actually driven by how they need to balance the economic realities of the past year in their household. And so they're looking to re-enter the workforce. And when it comes to concerns about employment, there is actually a big difference by generation. So Gen Z is much more likely to be worried. 3/4 of them are either slightly or all the way to extremely worried about their job security. They look at those macro indicators, they see things are more expensive, and a lot of them are also earlier in their careers from an age perspective. Okay, the third theme. This is what I call the spend dichotomy. And really, it's a counterintuitive pairing of consumers not spending and saving, but also wanting to treat themselves. 80% of consumers have traded down. And this has actually increased since last year, even though inflation has lessened a little bit. And what you see on the side of the page is that it's pretty consistent across demos. It is more notable for Gen Z, just like we just spoke about in terms of employment concerns. There's a link to jobs, so Gen Z is a little bit more likely to have traded down in their purchase behavior, but everyone's doing it. And it is true across income bands as well. That surprised us in terms of how consistent it was. And when we ask consumers about the why, and really what does trading down mean, it's a whole host of things. They might choose to buy a less expensive brand. They're choosing to shop a value-based retailer, so maybe a wholesale or an off-price club instead of full-line retail. They might be managing how much they buy at once, so the quantity, so buying fewer units. Or they might be delaying purchases. And delaying purchases is one thing we heard particularly notable over the last 5 months for the lower income segment. So what's interesting is despite the fact that consumers continue to tell us that they're trading down, and that's true across segments, they also plan to treat themselves. And this is where the dichotomy comes in. They do want to splurge, and over 40% of consumers tell us that they want to spend into something special. And what's really interesting here is there's this duality with Gen Z, where they are kind of the bright blue boxes you see at the top, the most likely to say that they want to treat themselves, also the most likely to tell us that they're trading down and that they're worried about employment. So what do they want to splurge on? Well, the younger customers in Gen Z splurge on apparel, beauty, and even food. The kind of older generations tell us it's travel and restaurants. And millennials, well, that's the column that has a bunch of green across the board. Because of families and their life stage, they actually plan to spend into many of these categories. And when we talk to consumers about, well, given all the economic challenges and headwinds, why are you splurging or treating yourself at the same time? They say that it is still a post-pandemic mindset, and they really want to live into things, experiences that they haven't been able to for a few years or weren't able to during COVID. And they want to purchase around in-person events or experiences, for example, beauty or clothes for an event, and travel to get out of the home. Okay, the fourth theme is really around the what. So we just talked a little bit about where will people splurge, but where are consumers actually putting their dollars from a category perspective? Well, it's changed over time quite a bit. So these two charts show spend on goods, which is the first one, and then spend on services, which is the second. And spend on goods has flattened and slowed a little bit. And what's interesting is the difference between the two, the blue and the black line on both charts. So the blue line is actually the value of what they're purchasing. Think of that as the dollars. The black line is the volume, how much they're getting for those dollars. And what you see is it tells us consumers, whether it's goods or services, they're continuing to take home a little bit less for the money that they're spending. And again, this is tied to inflation. And we start to look at this and we break it down by category. So this chart shows by category of purchasing, so everything from cosmetics to travel, how much of the growth in spend has been explained by price increases versus consumption. So the darker part of the bar is consumption. And so what's interesting here is more recently, we do see that there are increases because of consumption, not just because of price. So if you were around about a year ago, that dark part, the consumption-based increase, was much smaller. And so take categories like cosmetics and fitness, we're actually starting to see 10%-ish lift just by consumption. It's not just about the price increases anymore. This one's a little bit of an eye chart, but this effectively tracks spend year over year in terms of growth rate by category or by retailer type. And the way to really read it is the darker the blue, the higher the growth. And so you see a few things. One is, I mentioned travel. Travel's at the bottom. And from the left to right, kind of coming out of COVID until more recently, consumers are continuing to spend to travel, and that is continuing to grow. You see categories like cosmetics and sports that might have gone down a little bit, but are still maintaining growth. And then there are categories like home or apparel that have actually been a little bit more mixed. And when we look at the last, say, quarter or two, spend in those categories has been flattened or maybe slightly down. And this is also nuanced by segment. So who the shopper is does matter in terms of where they're putting their dollar. So this chart is when we ask consumers, what do they intend to spend? So it's us telling them their intentions. And everyone plans to spend in essentials. That's the first few columns that you see. Everything's pretty blue. And part of this is because they know essentials are going to cost more, so they plan to spend a little bit more there. And then as you move to the right, you see the first and the second row, especially the first row, which is the lower income segment. They're really planning to decrease their spend on what we call semi-discretionary or discretionary categories. The things you don't really have to have, not groceries. Things like apparel. And then high-income millennials are actually spending across the board. And they have positive intent across pretty much every category, including essentials and discretionary. So when you think about your shoppers and who is most likely to be willing to spend right now, there is a real difference depending on kind of where they are demographically, both income and age. Our last theme is around the continued growth of .com, which obviously matters to you all a lot, given the platforms on which you sell. And what's interesting is .com and the acceleration through COVID has stuck, but the omni habits of how consumers research across channels have also stuck and changed since 2020. So this page shows the penetration of credit card and debit card spend that's through e-commerce. So it jumped pretty notably during COVID, and a lot of that has maintained. And so right now, about 24% of spend across consumer retail categories is through .com or e-commerce versus brick and mortar stores. And if we think about all retail sales, so think of this chart as each bar is a different time frame, and it's 100% of retail sales proportioned out to where they came from. If we look at that in terms of where the consumer actually shopped, non-store retailers and e-commerce pure plays are actually the channel that's grabbed and maintained the largest share. So that dark bar, the dark black bar in the middle, is the .com pure plays. And you can see the growth and how it's stuck in terms of the share of retail that sustains. At the same time, one thing that also changed was the omni experience. And when I say omni, it could be anything from services like some retailers buy online, pick up in store, to just the ability to research a product and see it offline. And what we've seen over the last year, even more so than just since COVID, is that this notion of being able to shop in an omni way has grown. So for Gen Z, 85% of their purchases involve .com and also involve some kind of physical interaction in some form. In addition to the kind of omni notion of how consumers shop, there's also been a big change in what's influencing them. And so the advent of social media and influencers has also become a huge importance in terms of presence and research and a source of validation for buyers regardless of their category. So what's really important to take away from this fifth theme is that you need to be present and really influence that buyer across the whole journey and find a way to do that. It can't just be about putting a great product in front of them at the point of purchase. So thank you for having me. I hope you enjoyed learning a little bit about the US consumer, and I'm really looking forward to discussing these things today with you all.